Well, hello traders and investors. I'm LA Little and this is your daily NeoTA wrap. We take a look at these markets, doing it from a neoclassical perspective. That means every day we look at these markets and ask ourselves what happened today. What does it tell us about the coming ones? I do a show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little. If you haven't subscribed and you want to, just reach up in the right-hand corner and do so. If you do that, right, then you can keep up with what we're happening here in these markets and my interpretation of what that means. We're always looking for clues. We're looking at tests. We're looking at those tests and asking ourselves, what does it tell me? And I kind of go over that with these cradle-to-grave trades, which are trades that we're actually making on the TA Today site with the members. And, those trades, as we look at those trades, we're looking for those subtle clues to try to make decisions about what's going to come next. And that's all you can do, right? You can interpret. You have a thesis. You interpret what the market does at critical points. And you apply it to that thesis and make sense of it all. What happened today? Well, they took it all back, right? Yesterday they're up 1%. Today they're down. They're not quite 1% in most cases. The Russell took it all away, but the others kept just a little bit of the gain from yesterday. But for the most part, all the good that was done yesterday was all taken away today, and that's never a good thing, or I should say that's seldom a good thing. And so I guess my first thought here is, what are they going to do with it next? Because once you've done that, where do you go next? So pretty much down across the board here on all the indexes, 1% pretty much on all of them. You had silver spike, gold spike. You had the dollar trading down 0.5%. We're going to talk quite a bit about the dollar tonight. And then elsewhere, you had down overseas. It all pop pretty big in a world of its own, but helped by a weaker dollar today. Let's talk about the dollar to start with, and then we'll go to the actual indexes. And the reason I want to start with the dollar is one of the members had brought up an answer to this perplexing question I've had, which is, the dollar should have continued to trade south. In other words, the dollar should have continued to get weaker and weaker instead of stronger after it broke multiple swing points. That's one of the tenets of neoclassical. And it's only a probability, but it's a high probability trade that when it does that break, and it does it on multiple time frames as it did here, if it's too extended, yes, that can stop it. But this was extended, but it wasn't horribly extended on the downside. Yet it turned around, traded back to the upside, and actually had some pretty good volume when it did it. What is that telling us, right? Now, maybe it's going to be a continuation back down, and maybe this whole weaker dollar thing is going to continue to play out. But my attention was brought to the dollar index, and it was one of the members that brought my attention to this. And I just want to share it with you because because you don't have volume trading on Forex. You can't go to the source as I try to do in almost everything that I look at. I want to look at the underlying anytime I'm looking at something. But in some cases, you can't do that because you don't have volume. And on the dollar index, you don't have volume. And you don't have it on the Forex. But it's good to see, and the UUP, unfortunately, doesn't track this index exactly. And in this case, it didn't track it at all. Here's that weekly break that didn't take place. You get down, you get under, you get back over. I don't know what the volumes were here, if you could look at the volumes on this index, but it did do an under-over. So in other words, it failed, at least on price. We don't know about volume. Failed to get lower on the weekly, on the dollar index itself. And that's the underlying. And so when I see that, and I thank the member for bringing this up to me, he actually gave me a nice note today. I've got to share this with you. It was really interesting. He says, a recent member, reader of all your books, becoming a regular auditor of your broadcast, where you're kind enough to, show the neoclassical approach that's in your books, show it to, come to live on the charts. He says, I'm far from being a kind of groupie about anything, but I must admit that I'm becoming a fan. And, that sort of feedback always makes me feel good because I think we have something special in what we do with the neoclassical. But yet he has taken and found something that gives me some sort of an explanation of what's going on here with the dollar. So in other words, on the dollar index itself, that range is still holding. hasn't given it up. Test fails, holds. Let's see if it continues to try and work its way back higher. And that has big implications, right? Because, the currencies move everything else in the end. They're the biggest market by far. They have the most impact. And that's because they float against each other. The exchange rates, they're not fixed in most cases. A few nations still are fixed, but most of the major ones float. The Shanghai, or not the Shanghai, but the Chinese yuan is the only one of the majors that's fixed. And fixed currencies can be a problem, right? Just as floating currencies can be a problem. The fixed one can be a problem if whatever you're fixed to goes in a direction you don't want, because if you're not the central banker of that currency, so in other words, the yuan is fixed to the dollar, you can't control what the dollar is going to do. And you can't do anything about it. And I suspect that a big part, I keep saying Asia is in trouble. A big part of what's happening in Asia is tied to this dollar and this dollar strength, because it's ruining the competitiveness of China. And if China wants to become more competitive, they've got to let their currency devalue. But it's fixed, and they can't make it devalue, or they can't allow it to devalue very easily. That's a problem. And if you do devalue, that's actually another problem, and that is that people try to do, capital flight. They try to take, if I'm in Canada and my Canadian dollar is depreciating, 5%, 10%, 20%, as much as 32% at the worst case here just this year, earlier this year, am I going to hold Canadian dollars if I don't have to? I'm going to put that money somewhere else if I can, so that it doesn't lose its value relative to another currency right next door. And so that's the sort of thing that can ruin the competitiveness of a country, and it has an impact on the markets. And if you look at the Canadian market, if we pull it up and look at it, you can see what that that appreciation of the dollar against the Canadian dollar. Actually, it was more of commodities causing the problem, but you can see those effects take place, I guess is all I'm saying. And it's not a one-way street. There's more than one thing that matters. In Canada's case, commodities being down so much is what killed the Canadian not the currency, but the Canadian economy for the most part, because it's like we used to be in Texas and actually in Colorado on the oil trades, 20 years ago, 25 years ago. Oil went south, those economies went south. And Texas still does to some extent, but it's a lot more robust now than it was. Let's move on to another subject here, but I thank the member for bringing that up. I appreciate it. A good insight, and that may explain what's going on here with the dollar, and why it didn't, quote-unquote, fulfill that break on multiple swing points. Look at the S&P. So today, unfortunately, I don't have volumes in. I'm having to do this a little bit early today, so I don't have the actual volumes in. But I'm going to pull up the charts here, and we'll work through them, and we'll switch between the SPY and the ETFs and the actual charts. So you do an inside bar. That usually doesn't tell you anything. Let's see what the volumes look like on the SPY. Volume increase, and so that's not a good thing, right? So you got an increase in volume on a down day. Remember, we had slightly less volume on the S&P going up. So if that if the volume on the SPY is anything like the volume on the index itself, then that's not a good thing. Inside day here on the NASDAQ. Let's see if it was on the NDX as well. And yeah, so actually the NDX got over 4404. If NDX got over the top, back underneath. Let's see what the volume was on the Qs as a proxy, and less volume. So that actually is a bad thing too, if that holds true in terms of volume on the index. Both of these are not telling us a good thing. And then Russell actually went lower today, closed lower, took everything away. Let's see what the volume looked like on the IWM. And my guess is it probably increased, and it did. And so I believe these indexes, last night I was saying it looked like we were probably going to get some sort of pullback today. I didn't expect it to take everything away, but that's what it did. And that's not a good thing. And I did talk last night about the potential for an ABCD structure to the downside. And here on the IWM, you can see what I'm talking about if it goes and starts breaking out that low. So it's something to watch as it comes back. And it's going to be a key level here. If we just look at the IWM, for example, you had the swing point high. It held the lows on the IWM. Barely, it was a full retest after 6 bars, but it did hold. What it's going to do now is it's going to come into this big wide price spread bar. Let's see, that date was March 29th. Let's go back to the Russell itself and see what that bar looks like here. It doesn't have quite the volume, but wide price spread nevertheless. That's a significant bar. This will be a key test on the way back. So indexes look like they're going to try to push lower again. And if I looked overseas, which I did previously, the indexes, the overseas markets also look like they want to try and pull back again. You had attempts to go higher in Asia, and they fell back. Europe turned just like we thought it would. That was what was the key reasoning for these markets, our markets, trying to pull back today in our story last night on the tells that we saw. Let's see on the XLB. So you get an under over on the XLB. That's not good. That's bearish. You did hold over on the energy with oil up as much as it was. I'm just going to flip through these major indexes here. You close, you get under, and you hold the low, it looks like, on the financial. No, you didn't hold the low. You actually closed under it. Again, another bearish sign. When we're talking short-term stuff here on the dailies. Over under on the XLI, that's also a bad sign on the bounce. How many bad signs can we get? Can we get a good one anywhere? No. XLK gives it up. Over, back under. XLV closes under, full takeaway bar. XLU, let's go to safeties. Barely held. Let's see about the durables. Durables take everything away. Wow, I don't see anything good in these charts. And here's the XLK. I did the XLV by accident. That's an under over. Excuse me, an over under. And XLY, total takeaway there. Folks, this market wants to go deeper. And it's too bad I don't have the volumes on the indexes, but if we use the proxies, I think they support that notion. So expect some more selling tomorrow is the way it looks to me. Have yourself a great night. I'll see you then. Good night.